Right, good morning again, everyone. This is Mihai from pipsandtips.com. We'll be starting in about, well, actually, we're already ready, I think. Sure. Okay. So as always, guys, we'll be looking at the GU and GJ. All right. If we have time at the end, you guys are interested in other pairs, since this is somewhat a special session. We are in the middle of the holiday season, so in general, the liquidity is lower, and well, if any of you guys are interested in maybe a midterm view or something, I'd say more on the bigger charts, possible perspective for the next month, let me know, and maybe we can look at other pairs too. All right, now let's start with let's start with GU then. Looking at the weekly chart. First, as always, we're looking at a longer term perspective. This is the trend line I've been pointing out for the last few weeks. It's the trend line defining the current downtrend. And if I'm not mistaken, we were talking about bearish movement in GU last week. I think some of you were here last week and can recall. We were talking about two possible scenarios. One was this ABC correction, in which we are currently on this pair, and then a possible 1, 2, 3, 4, 5 targeting way lower, around 150. And we were saying that we're looking at the worst case scenario, what the market could give us. Since both of them were bearish, we were looking at the ABC, but just as well, the market could see something much bigger than that. Now, I think last week we were somewhere around here, okay, right after this drop. So we had already confirmed that this move up was a retracement. So we were looking for more downside. Since then, the market did go lower indeed, about 100 pips since these levels. Okay, so we're following this formation. Now we are not really at the starting point of this move. So right now you will have to time your trade on another chart, maybe a smaller chart. And actually there's, well, according to what I see, and I will show you on smaller charts, I think we might be in a moment of correction here on GU. Okay, but let's see, let's not anticipate. There is nothing so far indicating longs on this daily chart. Okay, we have this previous level of support that worked as support again and then as resistance. All right. So we are into this bearish wave. I don't see it ending anytime soon. Actually, there's no sign of any bullishness on this daily chart. Okay, I see the MACD starting somewhat to flatten down. So that means, well, since it's the end of the year and anything is possible, even abrupt moves on this low liquidity market conditions, well, maybe it's safer to just reduce exposure and maybe just take some profit, since we are at the first target, the 127 extension of this corrective wave up. So this was the correction. We already hit the 127 twice, okay, in the last week. My waves tell me there's more to come, but there might be correction right after this level, maybe up to 155.50, maybe even slightly higher to 156, and then we'll see if it has enough strength to continue lower. So first thing that we have to notice here, direction is down, but we are close to a level of support that hasn't yet proved itself solid. But it doesn't seem, not even on this daily chart, which is clearly bearish, it doesn't seem to me like the best place to initiate shorts. Okay, maybe if you are short from a higher level to just hold on to positions, that seems more logical, but to initiate shorts around here based on this setup, it seems to me a bit too late. Now let's continue forward on the 4-hour chart. Let's see how the indicators look and if we have any reason to look up. Actually, we do. Now what we have here is, the way I see this wave formation, it looks to me like a 1, 2, 3, 4, 5 with a failure here at the wave 5. We have actually a close. This closed at 154.67, which is higher than the previous close. So that means the current small wave here, we will get a better look on the 1-hour chart. This small wave here is longer than the last move down. So that's already indicating that there's a pause here, there's a double bottom. So some retracements are to be expected. Okay, if that is true, and if we are looking indeed to buy with quite aggressively, we would buy around here with stops around 150, 153.60, 153.70. That's about 50 pips of risk for a target of about 100. We'll see if this is worth it. On this chart, we don't have any signal to buy, but we do have the setup, let's say, the preparation for a long signal coming later on. The indicators don't clear us for long. Actually, the tricks and the MACD are bullish, both of them, somewhat losing the ground right now, but still bullish, with a rate of change that it's actually quite flat, and I think it looks down. That's corresponding pretty much with the price action of over the last 6 hours. I can't say that this 4-hour chart clears the view. Alright, now let's see the 1-hour chart. Okay, now this is what I was saying just now. We have a move up that breaks the previous high, so that somewhat paves the way for a long signal. And we have a correction that right now, I think it's around a 50% fib. Let's fib this move. Actually, it almost touched the 61.8. So indeed, it tells me aggressively this would be an entry for a long with a stop around 153.80. I'll mark this setup for now. Okay, we need to confirm it on the rainbow as well. I doubt the rainbow will agree, but let's see. Okay, so this would be the stop area around 153.80, not earlier than that, because it might still bounce off the 78 fib, while still remaining in the same possible bullish formation, a deep retracement. I think to be even safer, 53.75, just to be away from the 78 fib, where it might spike again. Now this is, again, I'm saying it's an aggressive setup. So the entry would be around, let's say around here. That gives me around 50 pips stop. Okay, entry at 54.25, let's say right now, right here. Okay, stops around 53.75. The risk is clearly defined here. And then we have possibility of a move towards at least 155.50, so that gives me at least a 125 pips of target, about 2.5 the risk taken. Now the risk to reward is good because we're entering while the market is going down. This is why I say this is an aggressive setup. Okay, the stop is relatively small for a 1-hour, 4-hour setup, 50 pips only. Okay, this is the stop I'm usually using for an intraday 15-minute setup, and the target about 125. But in case things work out, you do take this trade and things work out, and you reach about 54.70, 54.80. Well, it would really be in your best interest not to close the trade there. At most, just protect your entry with stop at break even and allow the market to go, because in that case you will be proven right by the market, and you will be also confirmed into this entry at a very good level. So you practically, if we stop here, you get the best price. All right. I'll reconfirm this setup by looking at the rainbow. Now let's see the other issues here. Yeah, you see the last candle, the one that went down through this previous support at 54.25, actually failed to close in bearish territory and closed quite bullish at 54.33, and now we are retesting the same area. Basically, what I see here is the dynamic of a retracement. I wouldn't be surprised to see on the rainbow that this wave breaks a certain rainbow, a trend in the rainbow on the 30 minutes or 1 hour chart. We'll have a look in just a moment. This is usually how it happens. You have a big push, you have a signal right at the very top, the one that I usually don't take because it's just the first one after the market changes direction. Then you see quite a big retracement. Then the second entry comes somewhere around the same high. That would be 54.90, and that's the more reliable, well-confirmed signal. It can put you into the new trend. Okay, that will assume that we are in a bullish trend right now. We'll have to check, because this chart, this template doesn't give me all the information I need. All right, what else we have? Central pivot very close at 54.13. So we basically almost retested the central pivot about half an hour ago. All right, what else we have here on the 15-minute chart? Some support. Well, those of you who don't like risking 50 pips, even though frankly I think 53.80 should be a minimum stop for this trade, that's because, well, you have to know that when your stop is hit, you are actually wrong. So you don't want to stay in the trade because the setup is proven wrong. But if you have your stop around 154, the market can touch your stop and still do what you are expecting it to do. That's a bit frustrating. As far as I'm concerned, I prefer taking a bigger stop, taking a bigger loss, but at least being at ease with myself that I went out when the market proved me wrong. Alright, now let's have a look at the rainbow. Okay, let's see if what I was expecting is confirmed here. Haven't looked at the rainbow today on GU. Alright, now it doesn't look so good on the 4-hour chart. Clearly we are in a bearish trend. According to the rainbow, we have been advancing into the rainbow. So, well, any move has to start from the bottom, right? It's only around 157. It will be confirmed on the 4-hour bullish, but we don't have that much time to wait. So let's say that the overall background is a bearish background, and the daily chart does not encourage longs. Okay. On the other hand, this is exactly the sort of setup I was mentioning earlier to you guys. Hold on, this moving average is just too small. Anyway, I was just looking for it to extend a bit more to the left side. You see, this is a bearish setup on the rainbow. Once again, I'm not trading the daily chart. I'm not taking the entries on the daily chart on the rainbow, but this is exactly what I would look for on the 15-minute chart. I'm just translating it on for this case. Now, this setup here is the first time when the fast-moving averages go beyond the limit of the rainbow, which is the 200 moving average. Most of the time, it's the 200 MA. Okay. Now you can see, if you look back on the chart, that we've been above this 200 MA for quite some time. Matter of months. It's the first time we see the yellow and the red clearly visible and price clearly trading below the 200 moving average. Now, what's the prospect for this? What I'm expecting is something like this. price to actually go up a little bit or go lower and then up. And when it comes back and all the other moving averages, starting with the blue and all the others, will align just the way they are aligned here, that will be a fully confirmed bearish setup. So what I'm trying to say, yes, it is a bearish setup in theory, but it's the first exit. Just like the one you will see, most likely you will see something like that. I have a very strong feeling about it on the 1 hour or 30 minutes chart, because I know how the rainbow looked yesterday, and I'm quite sure that it was broken, it was pierced last night. Okay, you will see in a moment a very similar setup, and that scenario gave retracement, and then, well, we will see in the next 1 or 2 sessions if it's going to continue or not. But it's just, let's say, an announcement that the bears are here and the market balance is about to change from longs, the way it's been for the last few months, into shorts. Okay, but this is not a safe entry to take. Now let's see the 4 hour again. As I was saying before, going long 54.25 could get up to 55.50. That's exactly what I'm saying, Robert. Something like that, something like 55.50. And looking at the 4 hour rainbow, I doubt that it will go anywhere beyond 156.20. And even if it goes to 156.20, I think it might be an extension of this move. Of course, if this trade up, this aggressive signal that I'm going to signal is correct. All right, now let's see. This is it. You see, guys, exactly what I was saying before. We were into a bearish trend for quite some time. Since, I don't know why I'm lacking this 200 moving average. It's just stopping here. I have to do something about these charts. Okay, well, in any case, you can see clearly that since here, the rainbow was bearish, was aligned to the downside with 200 as an absolute limit. It didn't even cross my 100 moving average. You see the thick blue line, always retesting and failing and continuing to make lower lows. Now this is what I call a bearish rainbow in progress. Now when you go here and you see that the 200 MA is pierced, okay, and the fast moving averages are just peeking out, now this tells you there is an intention of breaching and of going up, but don't trust the first exit, just the second exit, the second alignment, because that usually gives the time for all the moving averages to climb up and give a full alignment. All right, we don't have it yet. This will be the second entry. I want to signal the conservative entry, the confirmed entry into the same setup, okay, which is probably somewhere around 154.80, depending on how the market moves. 30 minutes is mixed right now. We were in a bullish setup this morning, but again, not confirmed because it's very abrupt, this move, and it's also, even on the 30 minutes chart, it's the first exit. When the market moves this fast, the rainbow needs some time to adapt to the new, let's say, the new picture. And well, most of the times it needs time to confirm that that's really a direction followed by the market. Finally, 15 minutes chart. This is the first exit. That's right, Robert. Well, in general, I'm just following the trade to see where it goes, and I'm watching the momentum. And well, if I'm in profit, it's I'm just managing the trade. More important for me is where the trade will be proven wrong when I get in, because if I'm in profit about 100 pips, then I think trading is not that difficult when you already have a position making you 100 pips plus. But when you are entering and you just want to get started on the move and you don't want the initial hard stop to be hit, well, that's more important, I think. All right, on the 15 minutes chart, we are basically out of the rainbow now. indicating a short, but careful because the last full alignment was to the long side. As a rule of thumb, guys, you can see one setup here. Well, it's not really the one producing the best results, but it's actually a setup. This is the first alignment, the one that you do not take. You wait for the pullback. When this big candle happens, already it's the second time, and the market moves away from the top of the rainbow, and the moving averages have some time to get in line. And well, the stop is here. It didn't really produce too much. Okay, but it's the sort of setup that I'm signaling. Here, there's a signal that did not really work out. You see? Market pushes out, comes back to retest, and again comes out. This would be the signal. Now I'm showing you guys both signals that work and that did not work. This is a bullish signal according to my rainbow strategy. 54.50 stops around 54.25. It wouldn't have given you much loss, but still didn't work out. Well, I'm not very much surprised with things. I mean, with the market in between Christmas and New Year's, it's usually like this. There's no big. I think that the institutional side of the market is not really so active during these days. So we're getting a lot of jerky movements. All right, now let's conclude on this GU, and going back on this first chart. What I want to point out, guys, first of all, both scenarios that I'm pointing out right now on GU are aggressive, because basically we are going against the trend on the 4-hour chart and somewhat against the trend on the daily. The daily has not yet confirmed a bearish trend. As far as I'm concerned, we're looking at the possibility of a bearish trend, but it's not yet fully confirmed. As I said, when I see the first signal short after a long period of bullishness, prefer to be cautious until I see the second signal. So the daily does not support this, and the 4-hour chart definitely does not. There's a very clear bearish trend on the 4-hour chart. On the other hand, what does support my idea to try and go towards the long side here is this 1, 2, 3, 4, 5. There's indicator action here, and well, it was looking very good about 4 hours ago. Now not so much, but the indicators are still in the same position, the same bullish position, except for the rate of change, which of course I was expecting it to turn bearish after this price action, the last two candles. This indicator moves very quickly from bullish to bearish. It's very fast, but the other two are usually more stable, the MACD and the TRIX, and they are stable bullish for quite some time now, for about I think 1 or 2 days. Okay, that would support aggressive entries. Now the 1-hour chart basically doesn't give me much. There's a bearish crossover on the MACD here, but on the other hand, you can see clearly, and this is my second argument, that the previous high was taken out and we had the market closing above this level, making it very clear that this wave is smaller than the move up. Besides, if you look at the price action, if you look at these big, clear, white candles, and you compare them with the indecisive price action lately, well, you get an idea that this might be the beginning of something. Yes, Mapos, indeed. Yes, definitely. That's why you have to be careful. But actually, what I'm pointing out right now is, let's say, half a rainbow setup. It's not really a rainbow setup, because if you look again on this 4-hour rainbow, you notice that it is not confirmed by the rainbow. The 1 hour is somewhat mixed, and the 30 minutes very mixed. So I can't say that this setup is based on the rainbow itself. I will show in a moment where the rainbow would actually confirm, and it would confirm really well with a trade. I think a pretty good trade. Still a decent risk reward and a much better confirmed trade. You wouldn't buy when the market is moving down like I'm suggesting right now. So to come back to this setup, I'm suggesting now longs start around 54.20, gives you an even better risk to reward. So you can actually risk about 40 pips in this trade. And guys, I'm actually going to take it myself. Okay, so one moment. All right. So I'm buying myself 54.21 was my entry. So I'll just mark my entry here on this chart, 54.21, and my stop will be at 81 actually. Just making it a clear 40 pips risk. I repeat that this is actually an aggressive entry. I'm going long when the market is actually moving down. So it's only when you are confident that the overall picture is supporting your theory. And I like doing this really at the bottom of a move where I think that the market can bottom, so I can catch the absolute bottom, because this, what I'm doing right now, this is bottom hunting. I'm basing this trade on an Elliott Wave setup and on certain key factors. Number one, this 4-hour picture showing me that we have a 5 waves with some double bottom support here around 153.80. I like the fact that this support is not at a round number like 154. It's at 153.65, 53.70. Okay, and the indicators, the more stable indicators giving me the bigger direction right now on the 4-hour chart are bullish, are still supporting the upside. This is the first argument. The second argument, the same 4-hour chart gives me a close above the highest close of the previous wave. So this tells me that the market has retraced more than the last move down. So that makes the bullish side preferred, at least temporarily. The probability of this setup, guys, is less than 50%, but I'm targeting about 120 pips with a risk of 40 pips. So you can't really expect 90% probability. It's an aggressive entry. That's what it is, and that's why I only risk 40 pips. I really don't want to expose more than this to the market right now. For those of you not comfortable with such a trade, I will suggest an alternative as well. So this will be the second argument, the close of the 4-hour candle above the highest close of the last wave down. Then, this is the third argument, 1-hour rainbow piercing through the top of the rainbow. So that's indicating a possible change in direction to be confirmed when the MAs align. That means, well, it will take some time. Definitely not less than 5 hours from now. Even if we are going up quite aggressively from here, I don't think the GU will confirm this trade properly lower than 154.80. Okay? This is the first push outside, which is usually followed by quite a nice retracement. We had 61.8. Then if you see it continuing lower, it means you are wrong. It's not going to continue up. It just spiked through. It just made a temporary bigger than usual retracement only to continue in the trend. That's why you have to accept that you are wrong quite quickly, or it will prove to be what I think it will be, the beginning of a bullish move. By the way, I'm already up 5 pips on this trade, and the really nice thing about it is if it touches 54.60, I will be moving my stop to break even and simply forget about it. Just let it roll and maybe allow myself a 120 pips bonus for the new year. I actually had no intention of entering this trade, but since I analyzed it with you guys now, and it looks like the sort of trade can give me something, well, why not? All right, and finally, this 15 minutes chart, sorry, not the 15 minutes, but the 30 minutes chart, gave me a spike through the 200 and a nice close up. I think, sorry, it was the 1 hour chart. Bit confused here, 1 second. This is the one. Okay, now we closed indeed bearish. The last candle closing 3 minutes ago closed bearish. But since I managed to catch the, I think I was at the very bottom when I took the trade at 21. So the market had hit 54.18 because my spread is 3. 53.70. No, Robert, that's why I took the trade long. It could go, but if you were asking me, I'm actually long with the stop at 81. So if I had thought that it's likely to go there, I wouldn't have taken this long, and I wouldn't have presented the setup to you guys. Now, those of you who don't like risky trades like this is an aggressive entry, would probably be interested in something better confirmed. Now, when you see the first move up, and this we do have it already, we can look at it and we see that it's been retraced. Okay, we don't know if it's the beginning of a big 1, 2, 3, 4, 5 because we only have wave 1 and wave 2. Now this could turn out to be a big drop, in which case obviously what I'm saying will be negated. Or if the market goes back to above 78 fib of the current move down, assuming that we hit the very bottom here at 54.15. Okay, if we are going up above 54.70, so that's why I was suggesting this level, then you have an entry around here, 54.70. Your stop will be somewhere around 54.26, 54.30, and your target will be the same, somewhere around 55.50. And I would say not more than 56.15, 56.20. That's in case we're getting some extensions. Now the second setup, where did I mark the first one? Let me check. Okay, here it is. This was the first setup, the one that I took about 15 minutes ago. Now this is the more conservative setup with a chance of success more than 50% definitely. You watch the market go up, you allow the retracement to develop, you simply do not trade, you wait to see if this is indeed a retracement or it's just going to go through the 78 fib and collapse. If it doesn't collapse, then you enter when you know that this is a retracement, and that's only when the market goes towards the previous highs. And that will confirm the first wave as a wave 1 and the second wave as a wave 2. Basically, right now, this formation that I'm suggesting is not confirmed. It's just a projection of what I think should happen based on what I see, based on different other arguments, the ones that I mentioned on the 4-hour chart. But it's not yet confirmed. Once it's here, it is confirmed. So you know for sure that this was a retracement. So the Elliott waves involve a lot of guessing indeed, but you do have very solid arguments too. Like for instance, you cannot say that this wave here was a retracement because it's bigger than the previous wave. So it has, basically there's no other wave retraced by this one except something much bigger. And if that's the case, then we should be retracing even more. So this, for instance here, this small move up, since it fails to break the previous high, it can be considered a retracement once you know that the previous low was pierced. So it's just a play with the higher high and lower low on each move to tell you which one is a retracement and which one is the real move, which one is an impulse and which one is a corrective wave. Robert, after 55, I think 55 is just in the middle. 55 should not be a big level. I think more like 55.50 because that's a previous level of support resistance. So I would say, yeah, 55.50. And in extension, I would say 156.15. Just look at this. Look at this 4-hour chart. This is basically why I would say that 156.20 should be a limit, because it's the top of the rainbow on the 4-hour chart. Now, there's one thing you can always look at. If you are trading against the 4-hour rainbow, like I'm doing right now, and again, it's better to be confirmed by the 4-hour rainbow and trade in the direction of that rainbow instead of trading against it. I think everyone would agree that in general, since the 15th of December, it would have been more profitable to keep shorting than buying and even making profit on these small retracements, right? But if you do go against it, you have to take note of where the top of the rainbow is, because the retracements can go up till there, but it's not such, well, usually what I see is, more often than not, the top of the rainbow provides resistance. Because basically all the moving averages have to be broken until the price goes to 157. So that's why I usually think that when all the moving averages are broken, one after the other, and that's happening inside a bearish trend, right? That means there is enough strength for the opposite trend to break all the MAs and take them out. Then there should be continuation to that. All right, but if this is not happening, then you go back to the daily chart and you notice that 5610 is somewhere around here. And guess what? It's the 200 MA on the daily. So that means basically that this small attempt to form a bearish rainbow will remain in the same direction, and this bearish rainbow is ready and helped actually to be formed in the next few weeks. There is no contradiction. That's what I'm trying to say, coming from the daily chart and the 4-hour chart, for us to buy against the trend for about 150, maximum 200 pips. Okay? But when you do that, you have to make sure that the smaller charts also agree, because that's where you base your trade on. As you could see, we had lots of arguments collected from different charts. All right. I think that's about it. So to conclude on GU, I see a bullish scenario starting around here, and especially if you see that the hourly close is somewhere above 154.35, that will pretty much confirm what I'm saying and give you one more argument for this aggressive long. If you are not happy with the aggressive long, then maybe you would like to check out GU again later today if it manages to cross up towards 54.65, 54.70. If it doesn't, then it doesn't matter anymore how the market looks, because I don't have any bear set up for now. So if it drops, I just simply take my loss, the 40 pips loss, and that's it. But if it goes to 54.70, I might be tempted to add to this position here, keeping this winner from the bottom of the retracement and adding to it, and try to go up another at least 80 pips, 50, 80 pips with a double lot, okay, without risking too much. 54.60, that's correct, Robert, yes. If you want higher probability of success, then you wait for it to go at least clearing this high here. 54.50, at least 54.50. Because at that point, you wouldn't be trading against what the market is doing. Right now, I'm buying, even though the market has been going down for the last few hours. Actually, been going down for quite some time now. For about 6 or 7 hours. So in general, Robert, what I have with these setups is either a very good risk to reward with a lower probability of success, or let's say 1-to-1 or even less than 1-to-1 risk to reward with quite a high probability of the trade working out. It depends. This is how I this is where the money management comes into place. And it also depends on what's been going on lately, and if I'm taking trades on the same considerations, then there's a certain probability of success overall that I actually know for my strategy. So I know that when I've been wrong 3 times, well, I can push a little bit the 4th time. It's not like a martingale system. I'm not doubling the position every time. That would be stupid, and I would exhaust my margin very quickly, taking me to really high risk. But you can slowly advance, because like that you can actually recover your losses very, very quickly. That's right, Mapos, that's right. But you see, people have different opinions about buy low or buy when it's confirmed. Some people prefer safety and they like winning, so they prefer losing more, okay, as long as they usually win. Some people don't mind frequent losses as long as the wins are way bigger than the losses. That's right, Robert. Longer term, I think GU, looking at the bigger charts, I think GU has started this bearish move, and since on the weekly and the daily is pretty well confirmed, I don't really see it going up. There's a big head and shoulders here. You guys can see it very clearly. You see the head and shoulders. And we had a big breach of the weekly trend line. We even retested the same area, and now we closed above for the last 3 weeks. Generally, we're pretty bearish on the GU, and I don't think next year we can expect much bullishness on this pair, especially if it breaks somewhere around 153. We could advance pretty quick. Robert, probably after New Year's. I'm actually thinking about this trade to work out over the next 1 or 2 days, and that would be, let's say, very close to New Year's already. Then probably, well, we'll see if this is. I'm not trying to make any prediction, but maybe Friday we won't see much volatility in the market, and then starting next week, we could have a different dynamic and the bigger trends being resumed once the market comes back to normal volatility. Guys, any questions on GU or on these 2 pairs? We didn't manage to look at GJ at all today. Sorry about that. If any of you is interested particularly in any other pair, or you guys have other questions I can answer for you, let me know, please. As I said before, since we are here in a moment when not so many people are trading, I think we can I can answer some more personalized questions if you guys have any. No problems, Robert. I hope that this analysis will prove profitable, and we'll be getting some longs on this one. Some bullish price action on this one pretty soon. Robert, not really. I'm trying to set one up starting next year, probably mid-January or maybe starting February. I'm not sure when I'll be able to set it up, because I really don't have time for all the admin work around it. But if I do, if I'm starting these sessions on a regular basis every day, I'll let you guys know for sure. Robert, well, I'm pretty much trading all the time, so I come here on FX3 just because it's fun for me to analyze the market with you guys and to keep in touch with traders. But I don't really have time every single day to analyze for this long. I mean, sometimes the market moves fast. I have to check other systems at the same time or take care of other things. So basically, it's about where I trade. That if that's something that you would be interested in, let me know via email, and I'll give you more details. By the way, I'll leave you guys my email. Okay. 1 second. Okay, you can also check my website. There you go. It's the personal website. All right. So if you guys have any questions that I didn't manage to answer now, we'll keep in touch. Hope you continue to enjoy your holidays, and I'll see you guys next week after New Year's. Yep, thanks everyone for being here today. I know you guys have better things to do, so thanks for choosing us over the usual Christmas treats. Happy New Year to you two guys, and I'll see you in the next year. Have a good one.